Another session of Capital B Talks, now with a very special and the most important of all guests, Adam back. Of course, the only person mentioned in the Bitcoin white paper and Bitcoin pioneer and Bitcoin OG and strong representative of the interest of all Bitcoiners around the world. And as well, of course, the CEO of Blockstream and now BSTR, which we will talk more about. I am Alexandre Lézé, board director of Bitcoin strategy at Capital B, and the objective of this session is to give you more uh, opportunity to learn more about Bitcoin and Bitcoin treasury companies and Bitcoin capital markets overall. And so today's topics will be around the journey of Adam to Bitcoin, as well as the more recent topic of core versus not. And of course, the topic in Bitcoin treasury companies of the MNAV and what that means and what can be potential views on the future on this. BSTR, of course, with your own Bitcoin treasury company as well, Adam, in the US. M&A, that's been a recent topic in Bitcoin treasury companies. And of course, your views as well on Capital B, as you've been one of our very strategic investors since the very beginning. So, welcome, Adam. How are you today?
Yeah, good to be on. Talking about Bitcoin as always.
So maybe, Adam, we can start with having you tell us more about how in the world were you able to be mentioned in the Bitcoin white paper? How did you come with the idea of inventing Hashcash back in the 1990s? What were you trying to solve for, and are you satisfied with the end result?
Yeah, so I was interested in privacy technology and electronic cash, sort of a decade or more before Bitcoin, and um, so I was running one of the uh, sort of nodes in a privacy network, which is anonymous remailers, so a way to have privacy for email and for posting on discussion forums. And it's a peer-to-peer network, so somebody has to volunteer to run the nodes. So I was one of those volunteers, and people would spam through it in a interesting way. Like they were not trying to make money by spamming. It's a sort of false flag where they were trying to annoy operators of the discussion forums, so to induce them to block the remailers, presumably because they didn't like privacy. So it was a kind of attack on privacy services. So Uh, along with other remailer operators, I was thinking about how to combat that. Now, of course, the cypherpunks were interested in electronic cash, and at this time there was DigiCash, but it was a centralized system, built like a stable coin, very strong privacy, but it gone, the company had failed economically, so it wasn't operating anymore, and it also was perhaps not very scalable. But the thought process was, well, why is this? Generally, the reason people can spam is because there's no cost, and so what you would like to do is charge people for sending messages through the emailer, and then if they send a lot of messages, you could use that money to buy, a faster network, a faster hosting, that kind of thing, and but of course there was no electronic cash, so I try to find a simpler electronic cache-like thing that might be buildable. Electronic cache itself was difficult to do in a decentralized way, and that's where Hashcash came from. So it's basically using your computer to create a postage stamp, a small string you can attach to the top of the mail, and then the recipient could check if it's valid. They didn't have a way to respend it, but they knew the sender had spent some money to send that email, and that would generally slow down spam. And so that became part of the discussion of how to make decentralized electronic cash work, because when DigiCash, stopped providing service when the company failed, the people interested in electronic cash, the cypherpunks, were not deterred. They just tried to draw some lessons of how could you fix it. What do you have to design differently to make it more robust, so that the electronic cash can survive one company not being in business. And so the obvious thing as well, it has to be decentralized. And the other problem with that DigiCash is that it was like a stablecoin, so you needed a bank, and there was clearly a risk that it would be difficult to get a bank account. Maybe banks don't like privacy, and they could cut you off later, and then your electronic cash wouldn't be redeemable. And so Hashcash and using it to mine to create coins became the kind of standard building block idea for how to make, for that part of how to make an electronic cash system, which is, well, we don't need a bank account, you just mine them, right? And so that was Hashcash was in 1997. And then some of these ideas of how to concretely build an electronic cash system. People may have heard about B-Money by Wei Dai, BitGold by Nick Szabo. Those were in 1998. And then in 2004, Hal Finney tried to make it respendable, which is another idea, but he actually tried to implement it. And then, next development was Bitcoin. And so I got an email from Satoshi Nakamoto in August 2008 asking, about the citation for Hashcash and sending me a kind of pre-release copy of the white paper.
Wow. And now there is this debate between core and NIC. That's quite a jump. But what's your view on where we've come from the white paper to now where we are? And what's your view in general on the health of the Bitcoin ecosystem, its evolution from a decentralization perspective, from the early beginnings to what it is now, and what the current discussions on Bitcoin development can say about what is the state of Bitcoin today?
Yeah, I mean, I think it's sometimes the case that technology can end up being re-centralized. So there's sort of a bit of inertia for that, or companies, when they get involved, try to centralize things. So you saw it with PayPal. That was supposed to be, somewhat decentralized, competitive with banks, and over years they became very bank-like in their behavior, and maybe not that much better. So, of course, Bitcoin has come a really long way, and relatively quickly, I guess, in terms of user adoption, in the market price, the market cap, the amount of money that it's able to represent, and it's quite robust. But of course, nothing's perfect. It would be beneficial to have more decentralization in the mining, because that's part of the censorship resistance, that if you were, a protester and one company didn't like your views, then another company could mine it, or an individual could mine it. So having lots of different miners is part of the permissionlessness of the network, and there is room for improvement there. Topically with the spam, it turns out now there's a new type of spam, which is spam on the Bitcoin network, and some of it I think is fair to call spam, which is image files. The Bitcoin chain is very space optimized. The transactions are intentionally, with a lot of effort, engineering effort, made quite compact. And so to send, large image files, it seems quite wasteful to most participants. But it did have, in the last few years, a quite big industry developing around it, with VC financed startups. I think it spent about $800 million in fees for various types of non-financial transactions. think it's probably going down because these types of things tend to go in fads. So, people buy things in a wave of enthusiasm and then the price collapse if there's no use case or fundamental value. And it turns out the sort of Bitcoin proof of work, and so Bitcoin has a block size limit to sort of keep as a way to keep the network decentralized, and that effectively helps create scarcity and a market for paying for transactions. And so people are complaining about spam, but actually the thing that is effective that we know works is the scarcity of block space and the fee market. And so even though the maximum image size, there's like a 100 kilobyte limit, there's a 400 kilobyte limit, there's a 4 megabyte limit. These kind of limits, depending on how they're done, in practice, the average is 8.5 kilobytes, which is actually quite small for an image format. That means some effort has been put in to, reduce the quality, increase the compression ratio, make some trade-offs to intentionally make small images. So I think you can see that as evidence that there is some, that they are fee sensitive and that's having an effect. So in a way, that's a success story. But of course, spam is a nuisance factor and people don't like it. So they want to try to do more. And it's quite hard in a permissionless, censorship-resistant, decentralized network that's specifically designed to stop censorship. It becomes hard to actually selectively block spam. And that's what NOTS sets out on, is the mission to try to do it anyway, even though it's probably, it will never fully succeed, and it might in fact have side effects. So that's one part of the debate. And I think the Bitcoin reference client, Bitcoin Core, of course, it's a very big project with hundreds of developers and lots of important changes. So for example, Bitcoin 30 makes block synchronization 20% faster. So you can start a new node and catch it up faster, which is important as the blocks are getting bigger over time. It has a fix for lightning pinning, so something to make lightning more secure, called TRUC, TRUC. And it updates some parameters in reaction to what's happening in the network. There's some kind of complicated discussion about how blocks are relayed through the network using compact blocks. So when a block of transactions is found, it's sent through the peer-to-peer network. And to make it faster, it doesn't actually send the whole block. It initially sends a list of the transactions in the block. And then the hope is that you already have the transactions in your mempool. You've already verified them before you put them in the mempool, so you can very quickly, in not many milliseconds, just assemble them. Now, if there's some transactions you don't have in your mempool, the procedure is you fetch it from your neighbor. But of course, when you go from a pre-verified transaction in memory to an alternative of making a network call, verifying some signatures on what you get back, that's going to be orders of magnitude slower. And so differences of opinion about what policy should be on nodes has been measurably slowing down block propagation, and small miners are more adversely affected by receiving blocks slowly. It statistically is worse for them. And so that's the underlying reason why the Bitcoin developers propose to change some of these parameters to try and work around it. There are other things that power users have done to try and work around it. There's another release, another kind of patch set or change set on Bitcoin called Libra Relay that tries to amplify the censorship resistance and try to make sure that try to minimize the differences between mempools preemptively. And I think there are some R&D ideas as well with weak blocks in the future. So No, I think for the average user, personally, I think this is, the network is quite robust. It doesn't matter that much. You don't have to typically upgrade. If there's something important, it will be upgraded in the prior version, there's 29 is the current version. There's a version 29.1 with some changes integrated. People could run that. They could run different software. I don't think it makes a big difference overall. But of course, people are sort of familiar with the block size wars, where it did matter because there was an economic outcome which could result in two coins. Nothing like that is going on here. This is just a local configuration for your node ultimately, with some side effects for the network that there are already in play, multiple workarounds for.
You mentioned that the term fundamental value at some point. What is, in your view, the fundamental value of Bitcoin? And I ask this question because that's some of the questions that we can get with institutions. So when you are asked what is the fundamental value of Bitcoin, what do you say and what do you think specifically?
Yeah, I mean, I think the fundamental value that bootstrap the network is the permissionless open network for transferring value, like the bearer eCash, the unseizability, the unfreezability. That's not a feature you have with a bank account or a brokerage account. And then you have also the asset class. And so I think when professional investors at fund managers ask about the fundamental value, they're thinking about the asset class thesis. So why should it have a value? They might compare it with gold. People have developed a whole list of questions about, when somebody's new to Bitcoin, they ask questions, and some of them are quite reasonable questions, but of course we've seen them all before, right? And, one is, well, gold has industrial uses. Okay, that's true. Bitcoin doesn't have industrial uses, but do industrial uses make a precious metal type of commodity money more or less useful? I would argue less, because the commodity demand interferes with the monetary demand, and in any case, the electronics use value of gold is extremely low compared to the price of gold or the market cap of gold. So I think it's not really an argument. And I think gold is a useful starting point because gold is effectively a technology, like a literal Neolithic technology in terms of the era in which it's developed. So it shows you that monetary technology can be robust and last and store value for thousands of years potentially. But over time it changes when better technology is found. So I would argue that Bitcoin is better monetary technology. You can assay it, verify its integrity very cheaply, very efficiently. You can move it at distance at low cost. You can store it at low cost. You can store it safely. You can program things about it. So ensure some simple rules on top of it. And people can use it for other uses at a higher level in ways that transfer the sort of auditability and safety and security of the network to even micropayments, where with gold, it doesn't really scale that far down. And we ended up with fractional reserve banking, or initially gold deposit receipts and so on. But those, you're just trusting an intermediary. So Bitcoin is able to provide both, a inflation hedge, like a hard money concept with scarcity, and security at high scale with layer twos. So I think it has a lot of technological advantages, and therefore, and it has actually slightly higher scarcity assurances than gold. So I think it therefore becomes sort of inevitable that it will gradually displace gold, and probably other kinds of monetary premium that have crept into asset classes like bonds, real estate, stock market, and so forth.
Did I lose you, Adam?
Now I hear you.
Okay. Okay. So I think we're back. I think it was just the last 5 seconds.
Um,
Yeah.
yeah, I was just saying that I think it's inevitable in the longer term that because Bitcoin is a better monetary technology, that it will start to displace other forms of monetary premium that have crept into other asset classes other than gold, which has a similar store of value purpose, but also displace the monetary premium in bonds, real estate, stock market, and other kind of more esoteric stores of value.
Um, so going back to the nuts and core debate, it seems like both sides of the argument actually argue for the monetary
Oh, yes.
equivalence. And
Yes.
so, how would you what would you say that each of them argues for different types of argument for the same thing, which is at the end that Bitcoin is the the best money out there from capital and currency perspective, um, and why do you feel that there is a larger chess play at play here, and why in that sense even if you believe that monetary use case is the use case and the prevalent one, that still from a trade-off perspective, um, either core change or even the previous version of core would be potential. There would be at least potential bigger arguments to make in that respect.
Um, well, I think that it's more of a argument about a nuisance factor. So, as you said, whichever software people are talking about, they do agree that the monetary use of Bitcoin is why they're there, what they want to invest in, and they view the spam as a nuisance, right? It's a hard to stop nuisance, but one that is responsive to cost. So it seems to remain in the nuisance level, right? It doesn't, in a significant way, displace monetary use or the ability for individuals to cold store or to transact. So, from that point of view, it's really more of a kind of tactical argument between technical people on the same mission. How best to deal with this nuisance factor. Um, and, if there was a simple way to discourage it without side effects, I think we wouldn't be having this discussion. So it just turns out to be not very easy. It's maybe broadly an analogy to email spam. You can try, you can put filters, you can complain, but they keep doing it because they have a financial incentive and it's hard to stop. So I think that that's where it's at, and where it's likely to stay. Um, so I don't think there's anything kind of fundamental or important, though it is useful that people, you know, remain calm and objective and don't make, kind of rash decisions that affect their monetary use over what is ultimately kind of technical argument between technologists about what's ultimately just a nuisance factor, right?
Mhm. All right. So now shifting gears a little bit towards the capital market perspective. You've been very vocal in the Bitcoin treasury space for Bitcoin treasury companies that are focused on maximizing BTC yield and the increase of Bitcoin per share. Um, However, we've seen quite a drawdown over the last 3 months or so. A lot of MNAV compression. You've said before that you look closely at the MNAVs and how they behave, and that there are places where they go largely up, places where they go largely down. Do you think that time is a bit different? What's your view on the emergence of a lot of Bitcoin treasury companies, even if we could argue that it's still not enough because all companies should have Bitcoin on their balance sheet. But yeah, what's your view on this, on the state of the market? Yeah, tell us a bit more as well on BSTR, of course.
Yeah, I mean, I can't talk too much about BSTR because of the regulatory stage, but I mean, we can talk in generalities and about the things that have been filed. I think generally that it's very logical, I mean, because you have people commenting on this from a traditional background who are share investors or portfolio managers, and you have people commenting from a Bitcoin side who have maybe not invested in the stock market before. And both of those groups initially reacted with skepticism to the Bitcoin Treasury Company strategy, which MicroStrategy kind of pioneered, right? So I was relatively early in getting involved with that, partly philosophically initially, because I thought it was an interesting and positive initiative to help companies also adopt Bitcoin. I think of Bitcoin as a way to preserve value, and companies are groups of people with a common mission to develop some products or services, and they have cash reserves. And of course, if their cash reserves are being eroded by inflation, that's bad for the company. And so, I could see a world where in the future, basically every company has Bitcoin reserves. It's the standard reserve asset. I say that Bitcoin is the hurdle rate. So in other words, there seems to be no other asset that has been able to keep up with Bitcoin over the long term, and therefore, storing reserves in anything else will like historically has underperformed, and we'll see what happens in the future. So then, of course, MicroStrategy was able to sort of discover and explore a lot of different techniques to increase Bitcoin per share over time, which they've been very successful at. And it took more years than I expected, but they ran a conference series trying to help other companies to overcome the procedural hurdles it took for them to get Bitcoin onto their balance sheet. And I think Metaplanet was one of the relatively early ones, and I was also involved in that one quite early because I knew Batara Eto, who was actually the person that suggested to them as a hotel company that, hey, maybe they should buy Bitcoin. The hotel chain had been impacted by COVID's impact on the tourism and hotel use. So that, I think it's interesting to look at Metaplanet as an example for MNAV compression, because there are some unique things about the Japanese market. Firstly, they have very high tax on Bitcoin and a lower tax on shares. And there's a very active retail environment. There's a large population of retail traders and professional institutional traders. They seem to be applying quite a lot of leverage. I think that's the understanding. And the market has limit up and limit down. So if it moves, if it's below some level, if the share price moves over $100 up, you can't trade. It won't let you sell above that, or the same on the way down. And those thresholds change depending on the price. And so that phenomena probably amplifies volatility when combined with leverage. So in any case, however it's working, the Japanese market has enabled Metaplanet to harness that volatility quite effectively. So the Japanese market doesn't have ATMs at the market offering.
Yeah, I can hear you, Adam. Can you
Okay,
hear me?
yeah. But they have something similar, moving strike warrant, and that has been quite successful. So, just watching it since they started, I saw that their MNAV would vary, between 7 and 3 and things like this. So it would sort of get very high and then there would be some limit down, so a dramatic drop, and then it would get reanimated and it would limit up, and it's done this multiple times. So once you've seen a pattern, people will start to trade that pattern, or momentum trade. Many people will buy things that are going up and sell things that are going down. So now there are, of course, more newer companies, capital B and H100, who have also shown sort of similar performance, maybe even outperformance in terms of rate of increase in Bitcoin per share, and developed a range of MNAVs that company seems able to hold and to recover. And so I think we're just sort of waiting to see, when it's oversold, because with the low MNAVs, it's because they can't delete the shares, right? So somebody has to be short, and all of the shorts have to buy back, basically, right? So either new buyers are buying at attractive prices, or the shorts have to cover. So as soon as there is something that triggers some upwards momentum in the Japanese case and causes a limit up, that puts pressure on the shorts, and then it will tend to run. So we'll see how that plays out in the European markets with H100, with capital B, and of course there are many others that I'm not following as closely, but I think the other news that is recent is the announcement of Strive's acquisition of Semler. So it's been discussed and contemplated in discussions over the last year, let's say, that you could have a situation where one treasury company could buy another if its MNAV was depressed, or if its MNAV was below 1, which has happened in a couple of cases. And Semler actually was in that state for a while, in part because of a non-Bitcoin related impairment, which is there was some court case about medical equipment that they were navigating a settlement over, and so that would be a one-off cost to the company. So in any case, it's interesting that this offer, as I understand it, is actually paying a quite big premium above the market price, like 2.1 times above the recent market prices for Semler. And so they are actually in net paying a premium for even the Bitcoin inside Semler. Right? So they didn't buy discounted Bitcoin, but I believe Strive itself has a higher MNAV than this premium, and so they presumably consider that they should be able to apply the premium they had on top of the premium they bought, so that they will increase the value for the shareholders of both Strive, increasing Bitcoin per share by bringing in Bitcoin at lower than their existing MNAV, and of course for similar shareholders who now receive a big premium, and the combined company moves forward with a combined management team and a larger company to absorb the impairment cost, presumably. So we'll see how that transpires. But I do think that's interesting particularly because it was achieved at MNAV above 1, significantly so in the pricing rate. That may start to shift the way people look at treasury companies that are suffering MNAV compression for a period, because there now is an extra way that MNAV compression could be resolved. One is an acquisition, and the other one is just the market action.
On different markets, you mentioned specific factors in Japan. What have you noticed in other markets, like in the US or in the EU? What have you noticed that could be different?
Well, I think the tax differences seem to be fairly widespread. So, as you know better than I, with France, there are some quite interesting tax advantages with PEA accounts and ability to hold French domestic stocks in them, which wouldn't apply to international stocks and wouldn't apply to Bitcoin. So that's a quite attractive proposition. With Bitcoin Standard Treasury, the treasury company that I'm, waiting for regulatory approval on the de-SPACing process, the business combination agreement, we were actually so it was based on a SPAC, and then we did a number of different fundraising things with Cantor as the bankers, a equity pipe, but we also did an in-kind Bitcoin denominated equity pipe, which I think is the first one in the US, and using a tax structure that makes that so that defers tax on the Bitcoin investment, which can be attractive to US domiciled investors at that time, right? And interestingly, we anticipated that would be attractive to individual investors, but actually there were some US domiciled hedge funds with Bitcoin exposure who also made use of that tax efficiency. So it's interesting to see sort of tax and jurisdictional arbitrages playing a factor in the way that people are choosing to allocate a Bitcoin correlated investment to a treasury company as opposed to an ETF or physical Bitcoin. Now, it is a different risk profile, of course, but I would say that a treasury company is an actively managed Bitcoin in a way that an ETF can't really be. So while you are taking, some MNAV compression risk, there is also, some years of track record now where these companies have been able to show that with access to capital market mechanisms like corporate bonds, convertible notes, at the market selling, they can monetize the volatility, make use of premiums to sell at the market, and always incrementally increase Bitcoin per share. That's an attractive way to gain a Bitcoin position or an allocation of something Bitcoin correlated. So, and I believe there are similar kind of tax advantages in other countries. I'm not, so expert in those, but there's usually something specific to incentivize domestic stock investment or retirement savings plans that are tax exempt, but only for stocks on certain domestic stock markets and things like that. So it's not uncommon that such advantages exist. And I think, another reason that people might sometimes buy stocks instead of Bitcoin direct, you see in the UK, there was the Financial Conduct Authority, which is their regulator, was disliked Bitcoin, basically, and wouldn't approve Bitcoin ETFs for general share owners. And that is finally changing. I think next month they are on schedule to approve Bitcoin ETFs for retail use. But because of that, I had talked to a number of UK taxpayers who had selected to put MicroStrategy at that time into their whatever it's called, like a self-directed ISA or sort of tax-exempt vehicles or retirement plan accounts where they can elect which shares to buy. So that's another example. So, and apart from that, I think another factor is that there are lots of, a very large amount of money in the world is managed by professional fund managers in pension funds, in mutual funds, and so on. And those funds typically have a mandate, which is a set of rules about how and under what circumstances they can invest money into what types of instruments. And many of those vehicles do not give the possibility to invest in physical Bitcoin or maybe into even Bitcoin ETFs. So the ability to invest into Bitcoin correlated stocks that are doing an actively managed Bitcoin strategy is an unlock to them. And then I think the other phenomena is there's the passive income flow. So there are many people who are using a savings plan where they'll invest in a stock index, let's say, or a mutual fund, and every month for some elective proportion of their after-tax income. And those indexes then, if the public treasury stock gets included in one of these indexes, and there are many of them, domestic and international and global, some holding global stocks, as the money comes in, they're sort of by their own mandate of the index fund and they repeat investors into it, they have to buy pro rata stocks. So it provides ongoing new capital in share acquisition from repeat buyers.
I see. And maybe what's your view on the preferreds as a new type of instrument for Bitcoin treasury companies? Do you think that this is uh, the end game for Bitcoin treasury companies, or what do you like to see as a shareholder from capital market operations from companies? What are the key metrics that you look at? You have invented some of them, the months to cover, for example. Is that still the ones that you look at on a daily basis? How do you go with valuation of Bitcoin treasury companies overall?
Yeah, I mean, I think the MNAV is, of course, very important because that is telling you how the Bitcoin per share is improving. I also look at the price of shares in Bitcoin. So let's say, depending on the price of the shares, maybe 1,000 shares is 2 Bitcoin or something. And that will increase as the MNAV increases because there's more Bitcoin in the share typically. So that's how I actually will look to price things. Now, I think the months to cover is interesting because it's showing you how long it would take if the company is able to keep up its track record of increasing Bitcoin per share until you account for the risk factor in the MNAV being above 1. So let's say, I think at some point early this year, MicroStrategy was in a position where their MNAV was about 2, and they had increased the Bitcoin per share by a factor of 2 in the last 18 months or something like that. And so one way to look at that risk is, well, if I buy it at a premium of 2 at that time, how long do they have to keep increasing Bitcoin per share at the rate they've done in the past for me to have spent 1 Bitcoin to have shares with 1 Bitcoin contained within them? And so in their case, that was 18 months. In other companies, such as Capital B, H100, Metaplanet, it's really a much shorter number. And of course, that evolves as the MNAVs come down and the amount of Bitcoin, primarily because the company's buying Bitcoin, the period actually shrinks. So in that sense, it's lower risk. But of course, sometimes depending on the capital mechanisms, the pace at which they're able to increase Bitcoin per share might slow down if the MNAV is low, to the extent they rely on the MNAV for the type of capital raise. So for example, at the market or a moving strike would generally be impacted by a lower MNAV. It wouldn't be as effective at increasing Bitcoin per share, but capital raised. Now, I think let's see, there was another topic we had there. Oh yes, the preferreds. So I think with the preferreds, that fits quite well into this discussion because the preferreds are not a debt. So it's not a corporate bond. It's not a Bitcoin basis convertible note, such as Capital B used. It's not a convertible note with a maturity where it has to be repaid, or where it gets converted into shares even necessarily. So some of the preferreds, and MicroStrategy has issued, I think, 5 types of the 5 variants now. And some of them on the end, which is most beneficial for the shareholder, they're preferred. There's no repayment obligation. They just have to keep paying the interest. And they can use that money to buy Bitcoin for the existing shareholders. So from that point of view, it's a non-dilutive way to increase Bitcoin per share. They are selling shares, but they're a different share class, Class B preferred or something like that. And so it doesn't create Class A share dilution, which an at the market would to some extent. I mean, people are obviously only doing at the markets when it increases Bitcoin per share, but if you can sell preferreds, create zero dilution, and use that to buy Bitcoin, it's even more beneficial. And there are variants as well, such as Strike, which is paying interest but has a conversion premium, where if the Class A shares reach a 30% premium or a 50% premium, whichever is in effect when they sell them, then the holder can convert that into Class A shares, or otherwise they can continue to hold it. Interestingly, some of the preferred shares, I mean, they're traded, and some of them have ATMs on top of them. So they can potentially raise money in a preferred, not by working on a private placement or working with bankers to bring institutional money together, but just simply by selling more in the market within what the market can absorb. Now, of course, there are some kind of credit worthiness, credit risk ratio questions where there may be practical limits, either from the market demand, how much demand there is for it. It's a new instrument. I think people are still learning to understand what this is and how it compares versus, a corporate bond or a treasury bond, a government bond. But if they sold too many such that the investors start to worry about their ability to service the interest, that could start to affect their ability to sell more. So, but within that works. And in the case of MicroStrategy, they've sold them with guidance about the level of over collateralization, even though it's not strict collateralization, but in terms of ability to service debt, how much more Bitcoin the company has as compared to the interest, so the capital that they're paying interest on, let's say. And the interest rates they're able to pay, or that they have been paying and selling at, are, they sound high, but I think the point is that from the MicroStrategy's perspective, a 10% interest today becomes a 1% interest in the future if Bitcoin is 10 times higher, and with access to that capital, they're able to bring forward buying that Bitcoin. So I think from their point of view, it's a good trade-off, but it can, things can be win-win. So it's also providing an attractive product to people in the fixed income market or individuals in terms of receiving, a high rate of interest from a company with a lot of hard assets to back their ability to pay the interest. So, they argue a better risk-adjusted return, actually. And they have been fairly successful at selling large quantities of them, but I think they're still ramping up. Now, in Bitcoin Standard Treasury's case, BSTR, we were able to, with Cantor's help in doing this, to take to market and sell a convertible preferred out of the gate. So with a new company at the SPAC and fundraising stage, pre-regulator approval, which was a first. And so there is, once the BCA is done, we would look to, have that be in the market as well as another preferred. So I think it's interesting for the market to see, multiple preferreds in markets so that people can focus on trying to comparatively price them in terms of the risk and the return and the scalability and the market liquidity, rather than what they do today, which is they sort of try to see if they can overcome the hesitancy to buy something novel and new, right? So I think it has a potential to normalize it and then to start to see credit ratings either from new analysts or from the established credit rating agencies ultimately.
A lot of listeners are Capital B shareholders, and a lot of questions are always around what is Capital B unique advantage? What has been your perspective on Capital B evolution from the very beginning back at the end of 2024 to the early to mid 2025, and what has been the base of your investment thesis, and what would you tell a newcomer to Capital B shareholder base?
Well, I think there's an attractive entry price at this point, that's for sure for a newcomer. And I think, so in 2024 with Capital B, you did a private placement round, and then, earlier in this year, the Bitcoin basis convertible, which was an interesting and novel feature with embedded warrants, basically to buy more and to commit more money. So it gave a reason for shareholders to give the company more money once that instrument was in the money. So that was quite interesting from an investor perspective. You pick an allocation, you buy some converts, the news of the convert, and plus the market reacted positively, and the embedded warrant within a relatively short period of time also became in the money. So now you had to find some more money that you were not necessarily expecting so quickly, but in a positive way because it already had a profit in it at that point, because the market price was above the conversion premium. I think the BSAs, the kind of market warrants, are also quite nice. It's something else, some option-like product to trade in the market. I traded a few of those, and it's another reason to send the company money to buy more Bitcoin, which is you buy them and convert them. So of course there's still some of those left because some people will wait to maturity as well. So, and then I think, other than the novel Bitcoin basis convert, which I think was quite effective for the company, for Capital B, because it enabled you to take on what would ordinarily be a very high debt ratio if it was a euro debt. But because it was a Bitcoin debt, it doesn't really have the kind of debt ratio risk because you store the Bitcoin received with a custodian, and even if the Bitcoin price pulls back heavily, the debt value is shrinking at the same time as the collateral, so there's no kind of stress situation. And of course many of those have actually been converted because the conversion premium was met, so the long-term debt is also being reduced, and then set the company up in a position to do more, which you've done a few of. And I think the other thing that Capital B has proven effective at is private placement with individuals and with fund managers. Now there is an ATM with Toban. It's Alpha Fund Manager, also invested in Capital B. But I think the capability to keep a fast pace of private placement money inflowing to buy Bitcoin has been a bit of a differentiator compared to, let's say, many of the US companies.
Great. And what would you say is a possible scenario for the future in terms of Bitcoin treasury companies 3 to 5 years down the road? How do you think the industry will shape over time?
Well, I think it's still a sort of new phenomena to the regular investor who's not familiar with Bitcoin, or to the Bitcoin investor who's not familiar with the stock market and the mechanisms that are being used, because they're sort of, to the average person, they're quite exotic things. So I think some more time in the market, some more history of how companies navigate different scenarios, like a bear market, the MNAV compression, mergers and acquisitions. I think with more market experience over years, I think it will give more companies confidence to enter. And I think even defensively without active management, it makes a lot of sense for a company to have Bitcoin as a treasury asset. So I think that phenomena will continue. And of course, once you have Bitcoin on the balance sheet, if you have the opportunity to use the capital markets to increase the Bitcoin per share, it would always make sense to do that, I think.
Yes, definitely. And on your side, is there anything else in Bitcoin that attracts your attention right now, aside from Bitcoin treasuries and the debates we've come about? I guess tokenization has always been one of your key areas. Maybe where are you on those aspects, and what do you think would be the next steps on this? And is there anything else you'd like to touch on?
Yeah, so with Blockstream, we have a layer 2, a sidechain called Liquids. It's a Bitcoin sidechain, so it's using Bitcoin technology that's been extended to support assets and securities and stable coins and bonds and smart contracts and so on, but in a safe, simple and security focused way. There's about 4 billion of assets, real world assets on there. And some of those assets are treasury stocks. So there's MicroStrategy that's been on there maybe 15 months, 18 months, and more recently MetaPlanet, and a few more that there should be announcements about very soon. Now, the advantage for having sort of security tokens like this, it's a proper licensed security. The mechanism for the current ones is a Luxembourg securitization vehicle. Each token represents units in the securitization fund, and behind the securitization fund is a standard bank holding the shares. And the advantage is that you have 24/7 pricing. You can transfer them and handle them in a very Bitcoin-like way. So you could pay for your lunch share in, 100th shares of MicroStrategy. That's like $3 or $4 or something. And the other interesting thing is that you have Bitcoin-based pricing on SideSwap, and Bitfinex has also added MicroStrategy. No, that's not correct. They may add it in the future. So they have some other securities on Liquid. So there's a prospect that we'll see some custodial exchanges with higher frequency order books, also with treasury shares. I think it's quite interesting to get the benefits of Bitcoin derivatives exchange, but applied to treasury shares for the liquidity. So the way I look at the treasury share is as a Bitcoin swing trade. So you might, in a broker, you might sell some Bitcoin and buy some treasury shares when you think the MNAV is low, and sell treasury shares and buy back Bitcoin when you think the MNAV is high. But the liquidity and the amount of time the market is open, the amount of leverage they will provide, they're quite, they tend to treat treasury shares like Bitcoin ETFs and want to give a very low LTV for portfolio collateral or for applicable leverage to them. So whereas the Bitcoin exchanges are, of course, they grew up with Bitcoin. Bitcoin is the base pair. So Bitcoin is not the risk to their perspective or mine. And then you have a 24/7 market. So it'll be interesting to see the emergence of Bitcoin exchange type margin, which often will go up to 5 or 10 times depending on the volatility, and even perpetual futures on treasury company shares. I think that would be nice. And markets priced in Bitcoin. So you can get a preview of it today with SideSwap, which is a Swedish company, a non-custodial OTC-like order book. You can store your shares in a hardware wallet. You can place a limit order on a market and be offline, and if the price is met, that will match. It could be traded in Bitcoin or potentially Tether or other stablecoins in the future. So that's interesting. I think some other interesting phenomena are to speed up the process. So in the service companies that public companies have to use in different markets, they have to rely on shared distribution agents and companies like this. So they'll do a private placement, and then they'll instruct them. The buyer has to fill in some paperwork. They will instruct the registration agent, the transfer agent, and the transfer agent might take a week to transfer some shares to a brokerage. Some of that delay will come from the brokerage. It's a very human, manual process. So initiatives to automate that so that you can, buy a private placement by clicking a button and have the share in your wallet within a minute is a more modern experience, shall we say, or the ability to convert a convertible note by paying the exercise price or by making the election and receiving the share in a minute as well. It's all very interesting and sort of a technology upgrade. So effectively, these are becoming the digital share certificate for the new era with more efficient mechanisms.
Well, thank you so much, Adam. I think we are now on time. I would like to ask you to end. What passionates you the most, Adam, every day in Bitcoin and in life?
Well, I mean, I think Bitcoin is the underlying thing. It's you know, it's a new hope for humanity, basically. So I think it's the most useful and valuable thing that anybody can work on and invest their money into. And so I'm interested in, the technology, the markets, adoption, and education for newcomers, and all of the things around Bitcoin.
Perfect. Thank you so much, Adam. Maybe would you have a final word for Capital B shareholders out there on X and on Discord?
Yeah, I mean, on my personal basis, I think there's a lot of good metrics in there, like a very good track record, a continued increase in Bitcoin per share, and that the market is just all of the users, right? So if you're invested for the long term, I think it's quite attractive to buy a treasury company, and you'll typically have to buy it at a market premium to buy it. But if you hold it for long enough, that the increase in Bitcoin per share gets you to the one Bitcoin invested per Bitcoin held by the shares. At that point, you can hold those shares for the long term, and the company's Bitcoin accretion is working for you. They are now you have a kind of passive investment that is over time increasing the Bitcoin you're owning by proxy inside the shares. So, and of course, you're assuming that it will generally hold above a one times MNAV as a minimum, because if it didn't, they could buy back the shares ultimately.
All right. Thank you so much, Adam. It's been, of course, as always, a pleasure and an honor to have you with us today. Would like to thank you, of course, myself and on behalf of everyone listening. I think we are all thankful for all of your work in Bitcoin along the years, and that you keep working harder every day for Bitcoin. So thank you so much. And I hope we have the opportunity to meet very soon again and have another session as well. Thank you so much, Adam.
Thank you very much.
Thank you. Bye.
Bye.